Ladies and gentlemen, good day and welcome to the Indogulf Cropsciences Limited Q1 FY26 earnings conference call hosted by Systematic Institutional Equities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. Let me draw your attention to the fact on this call, the discussion will include certain forward-looking statements, which are predictions, projections, or other estimates about the future events. These estimates reflect management's current expectations about the future performance of the company. Please note that these estimates involve several risks and uncertainties that could cause the actual results to differ materially from what is expressed or implied. I now hand the conference over to Mr. Pratik Tholia from Systematic Institutional Equities. Thank you, and over to you, sir.
Yeah, thanks, Anurag. Good afternoon, everyone. On behalf of Systematic Institutional Equities, I would like to welcome all the participants who logged into this conference call of Indogulf Cropsciences to discuss the first quarter FY26 results. From the management team, we have Mr. Sanjay Agarwal, Managing Director, and Mr. Manoj Gupta, Chief Financial Officer. At the outset, I would like to thank the management for giving us the opportunity to host this conference call. I would now like to welcome Mr. Sanjay Agarwal ji to begin the proceedings of this call by starting with his opening remarks. Thank you, and over to you, sir.
Good afternoon and a very warm welcome to Indogulf Cropsciences earnings conference call for quarter ended June 30th, 2025. It's always a pleasure to connect with you, not just to share our quarterly performance, but to also give you a clear and transparent picture of our journey, our market environment, and our strategic directions for the future. We are happy to report a strong start to the financial year, marked by a notable increase of over 43% in revenue and multifold increase in profits compared to the same period last year. Our top-line growth reflects both strong demand in core geographies and disciplined execution across all functions. Margin performance was bolstered by efficient cost management and better channel stock optimization. The global agrochemical market is expected to grow in 2025, following a period of challenges since 2023, as demand stabilizes with normalized inventory levels and price corrections. The growth is propelled by the increasing global population, climatic change pressures, and the urgent need to boost food production sustainability. Market trends emphasize integrated pest management techniques such as biological controls and crop rotation, while advancement in technologies like artificial intelligence, farm automations, and machine learning which are enhancing decision making and crop productivity. The market is diversifying its product offerings to include crop protection chemicals, biologicals, and fertilizers, with fungicides driving the growth, followed by herbicides. Demand is further fueled by increased production of oilseeds, fruits, and vegetables, while rising competition from alternative methods such as biopesticides is notable. Climatic changes continue to increase crop stress, necessitates more resilient solutions. Tighter regulatory frameworks present both challenges and opportunities also for research, development, and compliances. Although America currently leads the market, Asia Pacific and Africa are the fastest growing region. Overall, the market will be dynamic with a strong focus on sustainability, technology integration, and managing regulatory and trade complexities. Domestically, the Indian agrochemical market is also poised for steady growth in 2025, driven by the need for sustainable agriculture that balances increased population and income with climate change adaptation. This growth is supported by technology adoption and government policies, robust domestic demand, expanding exports, and policy support underpin the market expansion, bolstered by rising farmer awareness of modern agriculture practices. Favorable monsoon conditions and record Kharif season food grain production are enhancing market sentiments, supported by high minimum support price, healthy reservoir water levels, and steady farmer gate demand. Government initiatives like Make in India are fueling the growth of domestic manufacturing, and sustainability trends are accelerating the adoption of biopesticide, biofertilizers, biostimulants, and integrated soil and water management practices. New product launches in crop protection, plant nutrition, and biologicals are strengthening our marketing position as well. India has become the second largest global agrochemical exporter, but definitely faces competition from China and weather-related demand fluctuations in foreign market. Strategic innovations, regional market adaptation, and operational efficiencies will be key to navigating these challenges successfully. We have made significant strides with extensive R&D in biologicals and gradually developing biopesticide segment also. Multiple formulations are in pipeline to meet upcoming market and regulatory demands. We are preparing to lead this shift with planned launches in domestic and selected overseas markets in the coming quarters as well. Our R&D team has accelerated development of novel molecules and product upgrades. This quarter, we filed multiple regulatory dossiers and successfully completed trials for new products entering the markets in the next 12 to 18 months. These initiatives aligned with our growth and margin improvement strategy. We are recently honored with the Agriculture Leadership Award by Honorable Union Minister Shri Piyush Goyal ji and Haryana Chief Minister Shri Nayav Singh Saini ji for our contribution to the agriculture sector. Our backward integrated manufacturing infrastructure remains a cornerstone of our strategy, with 4 manufacturing units spread across 20 acres of land, boasting substantial capacity in formulations and technical manufacturing. It continues to de-risk supply with captive consumption of technicals at 22% till June 2025. In line with our expansion goals, we have allocated approximately 9,000 square feet for establishing our dry flowable plant in Sonipat, Haryana. This facility, expected to be commissioned within this fiscal year, is set to enhance our operational efficiencies, market competitiveness, and sustainability. Our people are our strongest asset. We have strengthened our leadership across sales, R&D, and regulatory function to support our next growth phase. Looking ahead, we are optimistic for the coming quarter, supported by product mix improvement, disciplined cost control, and the ramp-up of high-value segments such as biologicals. At the same time, we remain steadfast to our strategic priorities, particularly focusing on capacity expansion and a multi-brand approach to create long-term value for all our stakeholders. With that, I pass on to Mr. Manoj Gupta to elaborate on the financial performance. Thank you.
Good afternoon, everyone. Thank you for joining us today. I am pleased to walk you through our financial performance for the first quarter of FY26. We had a strong start to fiscal year. Revenue from the operation reaches to 1,894 million, reflecting a sharp year-on-year growth basis of 43.3%. This was primarily driven by 73.4% growth in our domestic B2B segment, alongside a 17% increase in our B2C segment. Our crop protection business continued to be the backbone of our portfolio, contributing over 90% of the total revenue and growing in high teens. Within this, we saw a strong momentum in biological, which grew 24.1% YOY, and plant nutrition, which grows 9.5% YOY, both reinforcing our focus on sustainable agri inputs. Our subsidiary, AGPL, Abhiprakash Globus Private Limited, delivered an encouraging performance with its mascot, giraffe, accounting for the 6% of Q1 revenue and doubling on subsequential basis. This validates our multi-brand strategy aimed at targeting district customer segment more effectively. We also made a significant inroads in key regional markets. Revenue from the Maharashtra grew by 83%, Odisha by 50%, and Haryana by 27% year-on-year. These market contributes meaningful to our overall growth and reflect the impact of our go-to-market executions. Our gross profit stood at 417 million, an increase of 28.3% YOY. EBITDA grew 66.7% on YOY basis to 99 million, supported by operating leverages and our continued focus on cost optimization. Profit before tax and exceptional items reached 46 million, reflecting a significant 509% increase over the same period last year. Despite the exceptional gain in the base quarter, profit over tax scaled to 3x to 39 million, representing the robust 187.4% year-on-year growth. Our focus remain on three priorities: sustaining at the momentum of the new product launches, deepening brand penetration in our core and grow markets, and scaling the mascot giraffe brand under our multi-brand strategy. We remain optimistic about maintaining our growth trajectory while continuing to drive optimum discipline and value creations. Thank you once again for your continued support. With that, we can now open the floor for the questions. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Pratik Tholia from Systematic Equities. Please go ahead.
Yeah, thanks for the opportunity. Sir, this 43% growth that you have reported in the first quarter, can you divide this between volume and value? How much was volume-led growth and how much was price-led growth?
So, the value-wise growth is, of course, evident in numbers. 43% is there. And quantitative...
No, value-wise I meant was on the pricing front. Whether you've taken price hikes also, which is led to the overall revenue growth.
No, the prices are more or less stable. The price corrections are there, and the prices there has not been any major ups and downs. So, and broadly we have focused on more on the high value and high cost products. So, broadly the value-wise growth is there, and the prices remain almost stable in quarter one.
And the volume growth?
Volume growth is there, but as I mentioned that we worked on high-priced molecules in quarter one. So a slight lower maybe because it's a big basket, so we cannot quantify exactly the volumes, but broadly you can say that the growth is there approximately around 35 to 40%, between 35 to 40%, since we have worked on high-priced molecules.
Okay. And sir, is this also this high growth that you're seeing in the first quarter? Because, the season also got preponed this time. The rain started from May. So is there some pre-buying, which has also led to this sort of growth? Because of last year, the season would have started in, say, June end, but this time the season started sooner. So does this also mean that in the second quarter... So basically, what is the outlook for second quarter? Because if you've seen some pre-buying in Q1, so then Q2 should be more normalized sort of, high teen sort of a growth, or you would continue this growth trajectory?
So definitely, we will continue this growth trajectory. Quarter one, broadly and historically also for Indogulf, has been the most important quarter for B2B business, because it demands for more sales of technicals, because these are preparing months basically for our industry for Kharif season, which picks the momentum broadly from June, and quarter two is the key months for our B2C business. And it has been in the past years also. So in this quarter, we expect high momentum from our B2C business, and the growth will continue.
So that is crazy. Sir, on the margin front, we have seen gross margins coming down by almost 258 basis points. This time you reported some 22% margin, versus last year Q1 it was 24.6. So any reason for such a sharp drop? Because you just mentioned that you have in fact sold high value products. So despite that, your gross margins have actually come down.
So the reason of this gross margins coming down was that there is a B2B sale has increased, and the B2B sale has a very low margins. These margins will be recovered in the second quarter. As a second quarter, as my MD has told you, that second quarter is basically worked on the B2C, where the B2B sales slows down and B2C sales increases. So definitely the gross margins will be increased in the second quarter.
Also, to add to this, like we have some product segment which is called biologicals and nutrients. So as a trajectory also, these products are mostly sold in quarter two. So those products add highest to our gross margins, and that will be evident from our upcoming Q2 results.
Sure. So what could be roughly the margin differential between your B2B and B2C and biologicals within the three segments?
Okay. So as far as gross margins, you can say, so gross margins from B2C ranges from 5 to, you can say, 5 to 8%, or 5 to 7. B2B. B2B, 5 to 7%, you can say. And B2C gross margin on an average are from 28 to 33%. That is the range. In biologicals and nutrients, they range from around, you can say, 65 and as high as product in some products unto 90-95% also.
Okay. So you are expecting a better margin profile in the coming quarter?
Of course, for sure.
Understood. And sir, we've also seen, your staff cost also went up in this quarter, and as a percentage of sales, and even I think your, it has actually come down. Sorry, my bad. But as an overall basis, it is up 20% roughly. Staff cost and other expenses.
So let me highlight here that we added one more company which is a wholly subsidiary of Indogulf. The name is Abhiprakash Globus, and the giraffe is the mascot. So we did additional hiring in this company, and this company is performing well. In this first quarter, it contributed around 6% to the total revenue as well. So there is an increase in cost because of this new company team recruitments, and we have also added some more professionals, as I mentioned, in our R&D and our marketing area. And thirdly, our annual increments last year were did not had an impact on our figures in first quarter. And usually the increments are done in August and September. However, their impact is considered, means the staff gets the increment from April, but the financial impact is basically in the month of August and September. So that increase is consistent there in Q1, but it was not there in Q1 last year. So these are the factors. So there is an increase in overall HR cost, but as a percentage, if you will look up, it is much lower than last year.
Okay, sir. Understood. So that's it from my side. Thank you. I'll join back in the queue.
Thank you.
Thanks for your question. Yeah.
Before we take the next question, we would like to remind participants you may press star and 1 to ask a question. The next question comes from the line of Dhavan Shah from Alpha Accurate Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. So my question is on the plant nutrient and the biological business. So I think the revenue in F25 was roughly 63 odd crore, and that was contributing roughly 8-9% to the total revenue. How do you see this number in FY26 and 27?
See, we are aspiring, we are very aggressive in this segment, and of course, this will be the core focus area. We are expecting around 30 to 40% increase in the total numbers, the total growth of biologicals and nutrients, and overall our Q2 results will demonstrate this performance.
Understood. And out of the 620 odd crore revenue in F25, how much would it be in the first half?
In the first half, last year, you are asking for last year or current?
Yes, last year.
So last year, the figures were around 380 plus, means almost you can say 55%, 55 to 60%.
Understood. So despite that, if I do the reverse calculate, the second quarter last year number was roughly 250 odd crore, if I do the math. So on that number also, do you foresee this second quarter can have a growth of roughly 20-25%?
Second quarter, of course, there will be growth more than 20-25%.
On 250 crore sales of last year Q2 FY25, you expect around 300 odd crore can be the numbers if we assume 20-25% growth.
Yes. But that is promising.
Okay.
That looks.
And how?
We are at the same speed. Means almost half of Q2 has passed, and we are performing in the same way. We are towards that goal.
Towards the 300 crore sales number for second quarter.
Yes.
And out of this 300 odd crore, let's assume if we clock that kind of number, what could be the technical sales or branded sales? Any ballpark number on that thing, if you can share? And how could be the gross margin? Because, gross margin varies very high, quarter on quarter. So if you can help us to understand the gross margin trajectory also in the second quarter and then third quarter and fourth quarter.
We can talk of quarter two. So quarter two, broadly B2C will be higher, and we are looking forward for approximately, you can say 180 to 200 CR top line figure in quarter two. And since B2C will be high, the gross margins will definitely be higher in Q2. So our performance quarter to quarter and year over year will be comparatively much better.
Understood. So 180 to 200 crore you are saying from B2C only.
Yeah.
Okay. And let's say, you can do roughly 18 or 85 crore of revenue from the nutrient and biological. Is that largely coming in first half only, or there is some sales in second half also?
No, it's widely distributed because these products are used at different stages of the crop, and these are used on all the crops. So it is not any season specific. Yes, there is maybe 55-45 ratio, but it is broadly all over the year.
Understood. And how do you see the full year F26 and 27? You said for Q2, but on annual basis, how could be the revenue trajectory on console basis for this year and next year, and how could be the EBITDA margin?
So broadly, we are aspiring for around 30 to 35% year-over-year growth annually. And this year, with the addition of this giraffe mascot and a new company, which will be, we are expecting a revenue of around 70 to 80 crores in this new venture. So that will be one of the driving tools. Also, we, with this company, of course, the geographies are being expanded. Domestic geographies are expanded at a faster momentum. And we also have new products. This year, we launched around 9 products, new products we already have launched. And our new product trajectory, just to share a few numbers, like last year, we launched few new products, and that added around 10 crores revenue in quarter one itself. In 2023-24, we launched few products. They contributed around 20 crores of revenue. So in overall, like last 3 years, the products which were launched, they contributed to 21% of our growth. So also by addition of 9 new products this year. So we are looking forward for we are aspiring for 30-35% growth with geography expansion as well as new products addition and this giraffe mascot.
And how could be
the will be improving? Yeah, EBITDA margins will be improving. So I think means there will be a growth definitely.
So last year, FY25, I think we were doing roughly 10 odd %, no? EBITDA terms?
Yeah. They will be better this year.
Okay, we did roughly 64 odd crore EBITDA last year, 10.9% EBITDA margin. So you are saying this year EBITDA would be how much?
That will be growing as per the revenues, and there will be growth in percentage, and of course, absolute terms, there will be growth according to the sales.
Understood. And how do you see the working capital situation right now?
Okay, so Manoj ji will answer that.
The working capital situation is much better. Last year in the first quarter, we were having around 225 days, which has come down to 200 days.
Okay. Understood, sir. Thank you. That's all from my side. And just one question, I think in the last Q2 FY25, you said the revenue was roughly 250 odd crore. What was the EBITDA number last year, Q2 25?
It was EBITDA was around between 10 to 11%.
Okay, 25 odd crore EBITDA you were saying. Hello?
Yeah.
Second quarter FY25 EBITDA was roughly 25 odd crore. Is that correct?
You can say.
Okay. But second quarter is normally, the higher, na? Because in the fourth quarter, we were having roughly 16.5% EBITDA.
I am talking half yearly.
Half yearly, we are saying 10.5% margin. Okay. Okay. Understood. Thank you. That's all from my side.
Thank you. The next question comes from the line of Shubham from RV Investments. Please go ahead.
Am I audible, sir?
Yes, sir.
Yeah.
Sir, you have not stated absolute terms in terms of revenue growth. So can you please tell that for FY26? Like from past 2 years, our sales are 553 crores in FY24 and then 590 crores in FY25. So what target are you seeing for FY26?
As I mentioned, we are aspiring for around 30 to 35% revenue growth in 25-26.
Okay, the 35% growth year-over-year. Okay. And what about EBITDA margin? We can see 11% is our OPM. So will that remain same or will that increase?
They will improve as a percentage, and of course, absolute figure will be aligned according to the increase in sale.
And same with the net profit margins also?
Of course.
Okay, sir. Thank you.
Thank you. The next question comes from the line of Raj from Arjak Partners. Please go ahead.
Hello, am I audible?
Yes, sir.
Yeah, Raj.
Actually, I wanted to know the breakup of our portfolio, like how much is in the herbicide, how much is in the fungicide, insecticide, or this.
Okay, so in crop protection, we are almost 50%, you can say, 45 to 50% insecticide, around 30%, 30 to 35% herbicide, and remaining fungicide.
Like 20% will be fungicide.
Yeah.
All right. And sir, how much is the breakup of formulation sales versus technical sales?
It is almost, you can say, 35% is to 65%.
Which comes to like 65% is the formulation sales and 35% is the technical sales, right?
Yeah.
All right. And sir, how much is the price drop we had in Q1 FY26 versus Q1 FY25?
In some products, there have been slight more correction, ranging from around 8% to 15%. But in most of the products, as compared, the things were stable.
Okay. All right.
On an average, you can say there is a correction of 4 to 5%, you can say, quarter over quarter.
On Q1, okay. And sir, in general, how much would be our sales returns?
That is not substantial part of our total business. It is in decimals.
All right. And when do you book it? Is it in Q4 every year?
No. We are booking it whenever it comes.
All right. So the sales return for Q1 FY25, Q1 FY26 will be reflected in Q2 FY26 financials, right?
No, it depends when the returns are there. So every quarter there are little returns. That is not substantial, but whenever we get the return, we book it in the same quarter. That is not kept pending for any specific quarter.
Okay. I wanted to know about your CapEx plan. So the overall, how much is the overall CapEx which we are going to do?
CapEx already we have done. If you will see my financials, the 63 crores are around looking in the CWIP. That CapEx is already going on with our own investments, and this 40 crores loans which we have taken, we have repaid with the IPO money. So that CapEx we are we are expecting that in this fiscal year we will be able to complete, and that production of that particular CapEx will come in the next year.
Okay, so the 63 crores CWIP, this includes, I think, IPO money of around 14 crores, right?
No, that CapEx we are just starting. That is the dry flowable plant, which for that we have taken the 14 crore rupees. That plant is also another CapEx, which we will be starting very soon, we will be trying to complete in this fiscal year.
That is an expansion plan for that 14 crores. That is a capex which we will be doing in this fiscal year.
All right. So the 14 crore capex is for the dry flowable plant. So then around 63 crores, which is sitting in our CWIP, what exactly is that?
That is already an infrastructure which we have built up. That is an additional capacity expansion, and that is a fifth manufacturing unit. A part of that will be this dry flowable plant also, which will be installed in this fifth facility. So already we have done a capex from our own reserve surplus. That was pre-IPO, and we have taken some bank loan for that. So out of the proceeds of this IPO, we have paid around 35 crores against this investment to our bankers. So now there is no term loan against that capex. So this capex is for for future capacity expansion, which will be driving the company for another 4-digit figures capabilities.
All right. So overall, we are doing a capex of 66 crores plus 14 crores, right? Which comes to around 76 crores. Right?
Yeah, you are right.
So on this 77 crore capex, what will be our payback period?
Maybe 4 to 5 years. Means payback period you want to understand?
At the EBITDA level.
Pardon?
I want to understand the hello. So on this 77 crore capex, what will be our break-even point?
In terms of turnover?
No, in terms of EBITDA.
Maybe in next 4 years we will be getting back the break even will be there, and we will be getting back this money.
Okay. In 4 to 5 years we can expect. Okay. And sir, post this capex, what will be our peak sales which we can achieve from our existing capacity and from the expanded capacity?
Maybe up to 1,700 to 2,000 crores we can do with these 5 units.
Okay. Again, sir, for FY27, what are our estimates for growth? We said 30-35% growth in FY26, right?
Sorry to interrupt, Mr. Raj. May we request that you return to the question queue, as there are several participants waiting for their turn.
All right, sure. Thank you.
Yeah, thank you. The next question comes from the line of Gursiddhar Singh from Prudent Equity. Please go ahead.
Hi, am I audible?
Yes, sir.
Yeah.
So, regarding Unit 5, as you've mentioned that, it should be operational soon. Can we get an exact timeline for it, and what the actual capacity expansion is?
So, it will be expanding our capacity almost 50-60%, and by this fiscal end, we are expecting to start this new facility.
Okay, and that does include the dry flowable plant as well, right?
Yeah, we are looking for that as well.
Okay. And are we expecting what kind of margins are we expecting out of the the new facility and the utilization for the next year, FY27?
That will help us to grow our top line, and of course, with the growing top line, there will be better operational efficiencies and better margins, and it will help us to grow our revenue.
Okay. Thank you.
Thank you. The next question comes from the line of Amit, an individual investor. Please go ahead.
Hello, am I audible?
Yes.
Yeah, Amit.
Sir, what will be your capacity once you are done with the capex? If you could give by FY26 end and FY27 end in terms of numbers.
What will be the capacity? Capacity utilization?
No.
Yes,
I'm
broadly. Yeah, please repeat, Amit.
What will be your capacity post expansion, post completion of capex, and your estimated utilization?
So as I told, the capacity expansion will be around 50%, 50 to 60%. And the utilization will be almost similar because we will be increasing in terms of revenue accordingly.
Okay. And sir, FY26 you said 30% growth. What about FY27, 28? How are you looking at it?
We are looking forward. We have planned our product roadmap, and we are looking for similar growth.
Similar as in 30% consistent over 3 to 4 years?
Yes, we are aspiring, and we are preparing ourselves for that.
Okay. And sir, why is the margin comparatively lesser in Q1 compared to Q4? So I understand the concentration of B2B and B2C. So if you could just provide a explanation quarter-wise of the margin so that it will help us understand the concentration as well as margins. So
in Q1, they are least because of B2B sales. And as you know, like our this fundraising and IPO listing was in early Q2. So Q1, we have been working with our own limited working capital and the reserves and surplus. So historically, Q1, we have focused on B2B business much strongly, and Q2, B2C, and then over the year, Q4 also, B2C is much stronger. So with now this fund induction in the company, we are looking forward for a better Q1 in the coming year as well. More B2C participation in Q1 in the coming year as well. So with respect to Q1, Q2, Q3, Q4, you can say that Q1 is the least one. Q2, Q4 are the best one, and Q3 is the average one. So overall, year means annually the EBITDA ranges between 10 to 11. So Q1 means Q2 and Q4 are the most powerful quarters.
Understood. Okay. Thank you, sir.
Yeah.
Thank you. The next question comes from the line of Gurusidak Singh from Prudent Equity. Please go ahead.
Hello. Hello.
Yes, sir, you may proceed with your question.
Hi. So I just want to know the current utilization for the plant, the four manufacturing units.
You want to know the capacity utilization?
Yeah, the capacity utilization for the units. Yeah.
Yeah. So basically, as you know, this is a cyclic business. So on an average, it is between 50 to 60% the capacity utilization is there. So however, Q2 is the highest utilization because we have lot of orders and lot of movement in Q2 in terms of B2C. So on an average, 55, you can say maybe 50 to 60, that is the capacity utilization.
Okay. Thanks. That's all from my side. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Thank you, and over to you, sir.
Okay, so I, on behalf of Indogulf management, thanks all the investors and all the analysts, all the friends of the company, and we are looking forward for a great year and a great quarter as well. Thanks for keeping trust on Indogulf, and as our logo says, let's grow together. So we are looking forward to grow together with all of you. Thank you.
Thank you. On behalf of Systematic Institutional Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your line. Thank you.